Welcome everybody. This is the Thursday evening Viper trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you are absolutely in the right place. First, we've got to knock out our standard disclaimer, and then we can get on to some charts and start talking about tonight's topic, which is proper target placement. Of course, that's just one part of what we'll cover, but other things will be covered too. So without further ado, let's get this disclaimer out of the way so we can get on with the show. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar. Excuse me. Sorry. Other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, so I'm gonna go over to man. I gotta wake up. Yeah, I have a big iced tea here. Maybe that'll wake me. I gotta get a venti black iced tea from Starbucks. Maybe wake me up a little bit. Trying to load a YM chart, but it's locking up a little bit. So just give me 1 second here. We will flip over there. Thank you for your patience. There we go. That's a 2. We need a 4. Just got to put a 4 range up here and load it all on up. Just a quick show of hands. How many of you trade YM? Any YM traders here? Trading YM. Oh, quite a few of you. Okay, cool. All right, most excellent. That's a good deal. All right, let's go ahead and get over to the YME chart. I'm going to kick off with that, and then we can go from there. We'll take a little bit of a vote on some of the other instruments that you want to see. We'll try to cover as many as we can tonight. Coming over to screen 1. Does everybody see a YM chart? Yes? Okay, good, excellent. All right. Okay, so we have a little bit of an open house here, so we might have some people on both a free trial and visiting us this week. And if you are, welcome. This is our Thursday night training webinar. Gary does them on Mondays, and then I will also do one on Saturday morning at 9 o'clock. We are connected to a data feed with our broker, NinjaTrader. And YM is the mini Dow. It is worth $5 per tick of movement. So each 10 ticks over here, see when you go, say, from 26,590 to 26,600, that is 10 ticks. So over here, for instance, between here and here and here would be 5 times 10 or $50. Okay. The background colors, the power meters, the predictors, bar colors, as well as the mid-band and all the bands above and below it are what are called Viper indicators. They're what we use to visualize and take trades, and we'll get into that in just a second. Most of what we trade, of course, in the live room is YM, the mini Dow. We're going to look at the Russell tonight. All of the equity markets and currencies are on the December contract. We used to trade NASDAQ in the room. I still trade Spazzy Nazi. We call her Spazzy because she's all over the place. We trade gold. We call out trades on ES. There's not a one in the room. And, of course, we trade crude oil, which we'll look at also tonight. So that's the instruments we track and trade. Let's get back to talking about what is going on here. The open, just to give you some orientation, so before we get into the sort of the meat and potatoes of how we take the trades and where to take the trades, is here is midnight Pacific coming into. So most of you know, of course, I've said this 1,000 times before. This is the end of the Asian trading session right here. Big banks over in Asia, Hong Kong, Singapore, are trading the futures 24/5. their session is actually sort of kicking off right about now, because this is their morning over there, right? And then at midnight, the Asian session takes over. So all the big banks and in Europe and England are trading futures, big banks, trading houses, brokerage, and what have you over there. And then the open of the equity market in the States here in the U.S. is at 6:30 Pacific. Translate that to your local time frame. So time frame. So if you're back east, that would be 9:30, obviously. And so before we can even start to think about taking trades, just sort of the step-by-step process that we do here, and I'm going to start with 6:30 and just before 6:30. One of the most important things to learn when you get up and you start looking at your charts is where the support and resistance levels are around whether the market is trending or not. If it's not trending, then all likelihood you're in a trading range. And if so, what is that range? Everybody see this chart okay? Chart moving back and forth. You see my cursor? Cursor moving around. Everything look good? Good? Okay. All right, good. So let me show you what we do. This is really simple. I'm going to go through kind of a step-by-step on how you can approach trading these markets. I'll start with YM, and we'll use a similar procedure on the other markets. Now you can see that leading up to 6:30, we had a resistance level more or less up in this area right here. And you can put big yellow lines on here so you see it real clear, sort of like Gary does in the room. I'm just going to put a thin line. You get the idea. Sort of, you get some swings where it doesn't quite get there, other ones where it's going to hit it, and other ones where it goes slightly past it. So resistance is up in here. And you can make the case that support is more or less down in this area right here. Now, what's interesting to note, and I'm sure you already see this, is that about 10 to 14 minutes into the trading session, I'm referring to this area right here, that this overall sort of larger range in the pre-market session does what? What does this market, what does YM start to do like right in here? Is the trading range that it was in getting bigger or smaller? Right over in here, right after the market opens. Yeah, it tightened up a little bit here, didn't it? Now, I'm going to just quickly recap. Most of you I see are experienced traders. Some of you have been with us for quite some time, so bear with me as I get the visitors and some of the free trial folks sort of oriented as to sort of the scope and approach of how we look to take trades. So the market is going to be in more or less one of these two conditions. It's going to be trending, in which case, from an overall trade entry perspective, depending on up would be taking long trades, obviously. Down would be taking short trades, so selling resistance, and we'll look at that. And you are going to have what are called runners. Runners are kind of what they sound like. You're going to let the market run, and we'll look at those over here in the sell-off in just a second. Now, the other way it could be is what's called sideways or range-bound. Sideways, some people call it sideways. Now, when you're in a range, most of you trade that differently. Generally speaking, and we'll show you how to look at ranges in terms of the trade entry, but from a target perspective, you're going to have what are called scalps. So scalping is the more or less the opposite of the whole runner concept, because let's just put this, tuck this to the side for a second. So I'm just talking conceptually right now. We haven't talked about trade entry just yet. We're talking a very 10,000 foot level. This is kind of an overview of how how the market works. Okay. So what we're saying is if you clearly can identify a range, support, and resistance area like this, then you are not expecting runners at that time. So if you are buying support as your primary mode of entry, we know that when you get up near this resistance level, you are doing what? Taking profits. Conversely, if you are shorting the market for your primary mode of entry, when you get down to support, as you did here and here, for instance, then you are looking to buy to cover. Buy to cover, yes, on the short side, right? Longs, take profit at the top. Shorts, take profit at the bottom. Or trail a stop if you have some kind of runner within the size. Now let's talk about the size of ranges because ranges are not all created equal, and then let's go back and talk about trending. Okay? So in the pre-market session, you had support, and just after the open right here, all the way till about 634, 635-ish, 750, and resistance was up here at 796. So how big was this range? 750 to 90, 98-ish, 90, 98. Yeah, 40, 45 ticks, right? Now, is that tradable? Is this range right here in the pre-market all the way to 634, 635, is this tradable? Does that meet our criteria? We have minimum criteria we set for range tradability. Is the answer yes or no on that? Could you have traded it? Yes. Yeah, our minimum criteria is 20 to 25 ticks. Below that, generally speaking, there's some slippage and commissions and what have you. There's no meat on the bone. So let's look at this range right here. Here, support is around 59.60-ish, and resistance is up here at 82, 83-ish. 76, 80. Now, is this range tradable? What do you think? Some feedback. Toby says that's a little bit too small for me. Lewis says I can get a couple scalpies in there, and Bill says just barely. Yeah, I would say that in terms of defining the lower end of range trading acceptability, this is at the lower end of it. Clearly, you can see 30 to 40, 45 ticks over here. These big ranges, these are very tradable. You can make good money in these, okay? Here, you're at the very cusp of the lower end. You're right at 20, 25 ticks. And so, and most of you know, of course, how we trade that. You fade the bottom if you're buying to get in, and you fade the top if you're looking to short and get out and reverse. Generally, the fade's going to be 5 or 6 ticks, excuse me. So in other words, when you see support down here, you can't just put a buy order right here because we don't know if it's going to get filled and you might miss a trade. So fading means that you come slightly within your entry, which is going to be buying to get in right here on that range. Yes? Likewise, to get out, you're going to want to get out up here. And then if you're looking to reverse and short it, you would flip the short. Get out of your long, flip, take the short, buy to cover. Go up here, flip, take the short, etc., etc. Right? So when we say that, when we say meat on the bone means how many ticks are in the middle. Because what you're essentially saying is you're saying, well, okay, you're defining the trade, and the trade is actually right there. It's not from here to here. It's actually from here to here, which would only leave you with 66 to 80 with a little bit of slippage in there. That's 14 ticks. Take a couple off for slippage. 10, 12. You'd be getting 10, 12 ticks. So what I'm saying is this, is that the targeting strategy in the range, everybody can clearly see, is very different than when you're in a trend. Let's look at the opposite of a range, which is a trend, as we see that the market went into here. Just after this 653 mark. If you remember, we were kind of getting jerked around a little bit in here because it looked like it was going to sell off with this thrust right here. But of course, that support held from the pre-market session right down in that 49 area, right? She popped up. She could not get back and take the top out. So this was not long trend continuation at all. It was simply consolidation until the market decided which way it wanted to go. And of course, you can see the shorties and the sell programs kicked in very precipitously right in this area right here. Now, if you were already short from the top of this range, then let's talk about, actually let me hold off on looking at trade entry just for a second, because I want to talk a little bit about trade management, both in regards to how we approach the trade itself, and I'm going to do it in this manner. Let me put a couple of things up here. Now, some of you may have a trading account where you can only trade one contract at a time. We call that one lot. Okay, most of you heard that, right? One contract / lot. We call that one lot trading. One lot trading means one contract, right? Now I'm going to put something up here. I'm going to say runner in trend. We know in the range, whether you have 1 or 4 on it, doesn't matter. You already have predefined where that target is. Yes? You predefine where the target is. So you can have 1 or 50. It doesn't matter. That's already set. That's a given. We just looked at the range here, right? Okay. Now, when you have 1, you should only do a runner. Now I'll explain that in a second. If you have 2 or more, you're going to have what's called a scalp out first, and then a runner. Okay? Let me explain. Let me put that one down here. I'll just put it back up here so we can track what we're doing here. There we go. Let me blow this up real good so you can totally see what's going on. All right, here we go. Now, if you were short, if you had done one of 2 things, it's quite possible you caught the first leg of the short. Most notably, if you were short from the top of the range, trading both sides, you would be short from somewhere up here. And you would trail your stop on down, and we'll talk about that. Now, if you put a box down here and enabled both sides, you would also be short. If you did neither of the above, let me ask you a question. So you missed this. Is this retracement here, is this retracement right here acceptable in terms of our minimum criteria to take trades? That's a yes. I'll give you 5 seconds. That's a yes or no question. Right here, this little box, does that meet our minimum criteria for trade entry, yes or no? Just type in a Y or an N. Look at the box. I'm circling it with my cursor. Just type in a Y or an N. In your opinion, is that a legitimate short entry right there? Two seconds left for your answer. Cast your vote. Time's up. Yes. So you hear this in the room a lot. Gary says it. I say it. You heard it in webinars and what have you. The criteria are, of course. So let me explain here what you're looking at. So there are 8 bands. The middle band is the thick one, right in the middle, right? And so you have 1, band 2. The line, the thin red line on the top of band 2 is called line 2, right? Then you have the mid band, and then you have line 1, 2, 4, 5, 6, band 6. The thin green line on the top of the here on top of band 6 is called line 6. So what you're going to find is that a lot of trades that we take in our methodology are in and around these 3 bands. line 6, of course the midband, and line 2. So a lot of what happens around these three bands, and you're going to hear that terminology called out live in the room as it's happening, right? It's going to probably retrace up and kiss line 6 for a roll short, right? It just broke line 2. It's coming up. It should kiss near the midband and roll, and I will short that. In fact, I distinctly remember, I think I missed this first leg here. In fact, I'm pretty sure I missed it. I don't even know if we called it in the room because it happened so quick. I can't remember if news came in. I don't know, some tweet or a tariff or who knows what it was. But, bottom line is she sold off. In all likelihood, most of you probably missed this first leg down. And you know what? That happens. Sometimes there's circumstances where you can box in the midband, let it go either way around news, and you'll catch that first leg. So you can catch it. But in all likelihood, as I recall, we were waiting for a retrace, and I remember calling this out in the room, saying if it came up near the midband around 18, 19, anybody remember that? And rolls, I will get short. And sure enough, it came right to 15. So here's the thing. For you midband traders that like this midband, you know by now, and not always going to get there, right? It's just sometimes these are called shallow retracements. These are legitimate trades. Has to close above stealth for the short and above line 2. Now, let me ask a secondary follow-on question to the first question. Is this retracement right here a legitimate short trade, yes or no? Just type in a Y or an N. And I'll give you, let's call it trade A and B in the secondary question. Here's 2 more little boxes. Are they legitimate, yes or no? Three more seconds. Cast your vote. 2 more questions, 2 more boxes. The trend is down. You're getting short. Time's up. Yes. Did it close above stealth? Check mark 1, yes. Did it close above line 2? Check mark 2. Yeah, it's legit. You get in. Yeah, you had 1, 2, 3 retracements. Now, we like to use what's called the region boxes in the Object Trader tool, where you simply pull up the box, center it and square it up where you want it, position it, activate it, and then it's a semi-automated tool in the fact that it'll fire it when you close below here. It will take the market entry. Okay, it'll take the market entry on the close of the bar. Let's look at some examples and really blow this up, because we'll talk more now about the mechanics of how Object Trader or you as a trader can take these trades. Let's use this example right here. Now, depending on how you actually drew the box itself, when the bar closes outside of the box, and in this case with the short and the strong powerful sell-off downtrend, you would have been enabling short only, no longs. Short only, no long. And it was possible that you were filled short on the close of this bar right here, or you could be filled short on the close of this bar right here, depending on how you drew the actual box itself. Now let's talk about what actually happens. If you have one lot on, in other words, only one contract to fire, it will fire a short right here. And the initial stop will be placed, by default, it's 12 ticks above where your entry went in. So in this case, you're short from 90. 12 ticks above that would be 02, yes? So here's your stop on your one lot up here at 02. Get this set up here. What the heck? Hold on a second. There we go. Now, what do we say? When you're trading one lot in a trend, are you going for scalps or runners? Let's type in S for scalps, R for runners. You're trading one lot in a trend. You're filled short out of the region box, and you have a 12-tick initial stop sitting up here at 02. Are you going for scalps or runners? By the way, for you, those of you that are visiting or somebody being a little bit new to the terminology on trading, that's okay. Scalp means a quick short profit. Generally, it's going to be anywhere between, like on the lower end, very lowest end, 4 to 6 ticks, and then on the upper end, 8 to 10 ticks. Depending on the instrument, that's considered what's called a scalp trade. One lot in a trend, you have to go for runners. Remember? We're going for runners. Why are we going for runners? Why wouldn't we just scalp? Just scalp, 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 10 ticks to Tahiti. Why not just scalp it? Got a very high win rate with scalps. Darn, my win rate's like 75%. I scalp all day long. 10 ticks to Tahiti. Why don't I just scalp? Here, let's do a hypothetical. Let's say that on the average, you are what we call a 50-50 trader. Okay, in other words, half of your trades are good, half of your trades don't work out. And your average win is, I don't know, let's be generous, 9 ticks. You're scalping. This is the scalper. Here, let's go. Let's go scalpy trader. Yeah, 9 ticks. You know, depend. You know, it might be 6. It might be as low as 8. You know, I'm just going to put a hypothetical. And your average loss when you stop out is 12 ticks. Is this trader making any money? The scalper trader that just goes for 8, 9, 10 ticks. This hypothetical trader, whether it's in a range or a trend, is this trader making? I might be describing some of you. Are you making any money doing that? No. It doesn't take a genius. You don't need your gonculator to figure this one out. I mean, every time you take a win, you make 9. Every time you take a loss, you make 3. So over the course of time, you're losing 3 ticks plus commission. With a 50-50 win rate, you're never going to get ahead, ever. This is a losing proposition, and this is trading one lot, yes? That person is going backwards. That's exactly right. Now, the mentality is, hey, I'm up 9, 10 ticks. I want to take profit. And what happens is, in this case here, you take the profit down here on the scalp, and then you miss a 40-tick run. Let's go with another hypothetical trader here. And let's say this trader is also a 50-50 trader. And let's call them a runner trader. Here again with one lot, right? And this particular trader, the average win is 27 ticks. And the average loss is, once again, 12. Is this guy making any money? This is trader number 2. Here's trader number 1, scalpy trader. Here's trader number 2. That guy's making money, even at a 50-50 win rate, right? Because over the course of time, as he continues to trade and he gets 50% of his things, he nets 15 ticks less commission, theoretically, if he continues to trade at the 50-50 rate, yes? That's kind of a no-brainer too. We all see that. Now, is there any way to combine the two? Well, you can't combine the two if you're a one-lot trader, right? Because you got to pick one. Either you're going to scalp it or you're going to go for the runner. You don't have a choice on the one lot. Let's do another trader. Let's do a similar trader. Let's call this one 50-50 scalpy runner trader. Now, how is that going to work? What does he do? Let's explain. He or she, right? Could be a he or she, right? Let's explain this. Now, if you're able to trade 2 or more lot, what happens is this, is that you take the first contract that you're entered, hypothetically, if you had 2 short right here, filled 2 short, right? And you have 2 protective stops at 12 tick stops up here, 2, yes? Now you combine the 2, and for the first contract, you peel it off at, say, 10 ticks. So you're filled short at 80, and you're trying to, or 90, and you're trying to get buy to cover the first lot at 80, which is right here. So down here, 1 lot comes off. Right? That's your scalp. You take 1 off. Right? Now, up here, you have 1, Object Trader will do this, but you can manually do it yourself. You got 1 left, because it's OCO. You're filled on the scalp, 1 closes it out, and then the other one, it goes into runner mode. Right? But what happens to this other stop up here? You got 1 kind of hanging up here. It's like a hanging Chad floating around up here. What's going on with this guy? What do you do with him? Push him up, pull him down. What do you do? What do you do with this remaining stop tied to the second contract that's still alive here short? Where does that puppy go? What do you do with him? He's like scraggling around up here. What do you do with him? Where do I go? I go down here. I go up there. What do you do with him? What do you do with this guy? He needs some direction. Well, now if you're using Object Trader, OT will automatically do this for you, so you don't have to worry about it. And you have to set some parameters. You set it all ahead of time. It's all good to go, right? You trail the stop. Now, generally speaking, what we do is, let's say you were filled at this 80. Now you want to give a little bit of wiggle room. This is where you have to finesse yourself on different instruments. I've said this 1,000 times. Okay, all instrument movement is different. I mean, I can give you some general numbers and rule of thumb, but you're going to have to play around with the instrument you trade. For instance, what I'm showing you here is not going to work on NASDAQ. I can just tell you that right now. And some of the numbers I'm telling you here are not going to work on ES. They're at the other extremes. Yeah, you got to get it close to break even. Exactly. That's what you want to do. Now see let's go how far back it retraces. Here's 90. Here's 90, 91 where you were filled. And look at the top of the wick of the bar that you got in on, which is 95. That's 4 ticks. So let's say you went 5 ticks above your entry for break even, and you made 10 ticks on the 1 lot. All of a sudden, Trump tweets that we're tariffing the whole world $10 billion. And the market just all the equity markets just freak out. And the thing it just spazzes way up here like that for some odd reason, some news reading bot thing. What would happen to the trader that did what I showed here? Would he still make money? He or she still make money? Yes or no? And let me recap my question so we're clear. You used a region box in Object Trader and you get filled short at 90, 91-ish on the close of that bar. You had a 10-tick scalp target that was taken off right there. Upon the fill of the 10-tick scalp, now you're down to 1 lot stop from the 2 that came down to within 5 ticks of your entry. After it breaks this and fills this 10, tariff thing comes out and it goes flying through the roof. Would you still make money on this trade, yes or no? In the way I've described it. Trading 2 lot. Yes. The answer is yes. Of course you would. Because what would happen is you've already banked the 10 ticks on the scalpy. See, obviously, this is all hypothetical. This never happened. I'm just trying to describe a scenario where you want to have a free trade. You want to have a free trade, okay? So that's how I'm not going to go through that again. We need everybody to pretty much learn this and practice this and tweak it to your own instruments. But essentially, that's what this is. That's how we manage it. And you want to try to trade at least 2 contracts if you can, because the combination scalpy runner trader is the better way to go. He or she is going to have, the win rate's going to be high on the scalp. You're going to have these runners here that you catch. And it's going to really increase your win rate, and your average loss is stuck at that 10, 12 ticks. So you end up, and then of course you want to get this ratio up higher. I mean, ideally if you get up like 70, 75, 25, that's even better. You'd make even more money. But what I'm trying to show you here is that even if you were 50-50, and it's important for your wins to be much larger than your losses. Look at it this way. Even if you went down and you stopped out consistently on this scenario that I've said right here, like every time you do this, it just does that. You get the scalpy off and then boom, takes it out. You're still netting 5 ticks. No matter what happens, right? You're still netting 5 ticks. This is really important. What I'm describing here is the meat and potatoes of taking trades with our system right here. This is it right there. Everybody understand that? Any questions on that? All right, we spent enough time, over half the session on YM, but I wanted to cover the whole target issue, and how we get in and how we trade it. So that's good. Let's put in some other instruments that we want to see. I'd like to cover at least 2 or 3 more if I can. What is everybody trading in here, and what do you want to see? What is everybody trading, and what would you like? Just type in your instrument, and I'll see if we can get to it. Man, this cursor thing's driving me nuts tonight, I swear. Try to pause the screen if I can. There we go. All right, let's see. We've got some crude oils coming in. Russell crude oil. We got 1ES from Bill, 6B from Dennis. Looks like the majority of the voting is for Russell and for crude. So let's get those up. Let me start with the Russell. That is an instrument I very much like to trade. Let's see if I can find a Russell chart here. Here we go. By the way, while I'm doing that, quick show of hands. How many of you trade Spazzy Nazi? Any Nazi traders in here? Spazzy Nazi. Just type in a yes or an NQ if you want. No? Yeah, most of everybody's kind of cast that to the wind. It's just so spazzy sometimes. It's just so really hard to follow. Let me show you the Russell right here, right now. Oh man, my apologies, everybody. This cursor is absolutely driving me nuts. When it gets onto the screen, I cannot see it. Screen is paused. Oh, good Lord, this is driving me nuts. Okay, hold on. Okay, it's going on 3. Is it on 2 yet? Oh my goodness. This is horrible. This is absolutely horrible. This is unbelievable. Okay, stand by. I found it. I have no idea why it's doing this. Now you can see that YM looks completely different in some respects from YM. Why are these markets divergent? Why don't they all look the same? Any ideas? Here's 630 over here. Anybody? Any ideas? Why does if these are all futures for equities, shouldn't they pretty much all look the same? Why does this Russell chart look so different from YM? Why is it different? Shouldn't it be the same? I mean, they're all equities, right? Different economic sectors. That's right, different traders, different algorithms, different markets. So for instance, we all know RTY is the small caps, right? So ES is the S&P Mini 500, S&P 500, so that's the large cap stocks. YM is the Dow, large cap stocks, right? NQ is the technology sector futures, right? Tech, that's high tech. And RTY is the mid caps. Now, what I've been in my experiences in trading in my research is that each one of those markets are affected by different things. So let's talk about tariffs, for instance. The way tariffs affect large cap companies are very different than how it affects small cap companies, right? And so as a result, when you have news and things that affect markets, Russells may or may not react like the tech markets will, right? May or not react like the large caps. It might go completely the other way. So in this case here, from 6:30 open in the market all the way over to here at 9:30, were you getting long Russell or were you shorting Russell? From here to here, was the predominant direction down or up? If it's down, you're going to say yes, short, that's short, downtrend. If you're going to say long, then the trend is up and you're getting long from the open of the market till about all the way over here at 9:30. Well, let's go back to the live room. A lot of you were in the live room. What were we doing in the room? Were we buying support or were we shorting the Russell? Remember? Anybody remember in the live room? What were we doing? Let me draw a couple lines to help you out a little bit. Draw a couple of trend lines. Oops, wrong type of line. Anybody remember in the room what we were doing, Russell, pretty much all morning? Close of the room was over here, so we actually stopped trading Russell right in here. Sideways to down. That's right. Sideways to down. It's predominantly a downtrend. You're going to notice on these charts as you get more familiar with them that when you're in a pronounced solid downtrend, you're going to find that the background remains one color. In this case, it's going to be red. And that, for the most part, you're going to be respecting resistance levels in the shorting of the downtrend. You can see that here, you can see that here, and you can see that over here. Now, when the background colors take on a striped shirt effect, like right through here, this means that you're in a range. And, don't take this as conflicting signals like, oh, you're telling me that I should be buying to go up when this goes green and then down when it goes up and down. No, that's not true. We all know that, right? You trade in the predominant direction of the trend. Now, let's look at this area right here. More specifically, now this runs a little bit counter to what I was saying a few minutes ago, right? This is running a little bit counter to what I was saying, so I'm going to contradict myself a little bit here. But in this area right here, even though you are trending, do you think you should, in terms of your targets, should they be scalp targets or runner targets? Right in here. S for scalp, R for runner. We're in a trend. Let's go back to the other thing, Charles. You said when you're in a trend, you're supposed to go for runners. Are you trying to tell us something different? Are you contradicting yourself from what you said 10 minutes ago? That makes no sense. Predominantly short, and you're looking for scalpies. Now, does that change over here? When you get this massive drop, does that scalpy approach change in this area right here? Yes. Now you can start looking for some runners, right? You can tell that as it starts to fall off the map. All the markets were selling off right in here. You might remember that. Now, let's look after 9:30. How about right in here? What are you doing? What are you going to do about that? It's about as sideways as it gets, isn't it? Let me help you out. Here was your resistance level, and here was your support level. This is the very definition of range-bound trading right here. Okay. There you go. Okay, good. Brian K says, I would stay out of that mess. All right, another question. If you're not good at trading ranges, should you trade them? Let's say you've tried trading ranges, you try to set targets, you see the scalp area region, maybe there's some lines in the room that are helping you out a little bit. And whatever you do, there's nothing you can do. You just every time you trade a range, you get hammered and lose money. Then our range is something you should trade. No, of course the answer is no. No. You got to get to know yourself as a trader. And if you know that you are good at trading ranges, then you go step in and trade them. Let's take a quick peek at whether this meets the criteria for trading. Support was down here at 48.20 and resistance is up here at 51.90, 30 ticks. This is tradable. All right, good. I know I'm keeping it pretty high level here tonight, and I'm intentionally doing that so that you can step back and look at the bigger picture, because I know sometimes we all get sort of sucked down into the minutia of all of it, and we never step back and say, oh, wait a minute, this is what I should have been doing, and I was doing the opposite of that. Let's get crude oil up here. Let's look at some crude oil trades here from 6 a.m. pit open. Where is that puppy? Okay, I'm getting the crude chart ready. How many of you feel while I'm loading up this chart here? How many of you feel like you're getting it and this is sort of getting through to you and it makes sense? And how many of you are struggling? It's a quick show of hands. I won't call out any names. Either way, whatever you're going through. You feel like a lot of this is pretty straightforward and you're able to step in and see trades and take them and know what to do, or are you, no matter what you do, you're still struggling a little bit? No shame. It all makes sense. Yes, I'm doing okay. I'm getting some direction to follow. Oh, okay, good. All right. Hey, let me show you some things on crude oil that I think are going to help you right away. Like you can put them to work like tomorrow morning. You want to see a couple of cool things that are going to help you a lot as you're looking at your own charts? Okay, here's the crude chart. Look, my mouse got fixed. Yay, total yay. Okay, I'm going to show you something. We can sit here in our comfy chair and say, an armchair quarterback after the fact, oh yeah, crude was in a downward sell-off all day long. I should have been shorting that puppy the whole way down. However, how would you know to do that in real time? What kinds of things can we do in real time to assure ourselves that there's not a trend change afoot? Let me show you a couple of things. Let me ask you some questions. And this is an overall thing you can just sort of learn. You don't have to, just sort of commit this to the back of your memory. And when you notice it on a chart, it's a really simple thing. Like, for instance, here's what I'm getting at. Can you see it? The oil got a little choppy in here. See how oil got a little choppy in here? Okay. And with these red and green backgrounds alternating, the striped shirt effect. In fact, you had blue bars coming up and challenging the outermost bands. Might have been a little confusing. Excuse me. But I'm going to ask you some questions, and this is what you watch, and it's really super simple to do. Is this swing higher or lower than this swing? Just tape an H or an L. Is it higher or lower? Is this swing higher or lower than this swing? Similar question to here. It's lower. Everybody sees that, right? Lower high, lower lows. Is this swing higher or lower than that swing? This one, the third one, higher or lower than here? How about down here? How about this one and this one? Now this doesn't always work, but if you're in a very powerful downtrending market that's going to have follow through to the downside, this is a technique that works pretty good. Okay? Every time you get a sequence of lower highs and lower lows, notwithstanding the fact that the background turned green and you got some blue bars, you got to sort of shirk that off a little bit and realize that you are still in a downtrend, right? You can draw downtrend lines to notice that. You can draw a downtrend line here. You can draw overall downtrend lines like this, downtrend lines. And what I'm saying explicitly, to be clear about this, if you're struggling with this because the bars are turning blue and you think it might be a trend change, until those swings are taken out, a trend change would demonstrate it like this. You would have to punch up through. Let's use this one as an example. Let's suppose that this one went up through here, or even this one. Even that wouldn't constitute a trend change in and of itself, even though this swing might have been taken out by a few ticks. However, if you came down into here and got a higher low and bounced, then did this, would that constitute a trend change? I think we would all agree, yes. So this is a simple little thing that you can employ on your charts. Just simply visually look or put lines. You can put lines there if you want, lines at the swings, lines at the sport. Just little lines. They have to be big, long lines or whatever. Just put a little line there and keep an eye on it. And as long as it's the low, you get lower highs and lower lows in the whole swing picture, you're still in a downtrend. So each one of these rollovers was legitimately short. Everybody see that? Just keep an eye on that. That might help you, especially if the background stripe color thing is hurting you. You know what? We're getting long in the tooth, but I can squeak in one more chart. What do we want to see? Let's see. We looked at YM. We looked at Russell. We looked at crude. Let's pop one more up. Cast your vote. Yeah, Lewis, I thought that might help everybody. That's a good way. So you don't have to armchair quarterback it. Just use the swings as your primary identification for what the trend is. And then you want to stay on the direction, even if it's sideways, of whatever that is. Clearly you were going sideways to down, but you were getting the stripe background. And a lot of people get confused about that. You know, is this trend chain? Blue bars is freaking me out. It's going way deep up here. What do I do? No, you're still short in here. All these are short. All these are kiss shorts. Kiss short, short, all the way down, all the way over here. ES2 range and a 6E. All right, let me pop a 6.2 ES down here. Yeah, let's do another show of hands for ES traders. Show of hands on ES traders. Do you let anybody else trade in ES in here? Let's get this crude oil chart out of here. Let's get old our friend ES up here. ES is like a how would you say it? Like a warm blankie. Like you know, your 90-year-old grandpa. ES is like the grandpa of futures instruments. Okay, I would say Nasdaq is more like Speedy Gonzalez. If you want analogies to think about it. Some days you don't get much movement on ES. I mean, it can just chop in an 8-tick range and drive you nuts. But other ways, you know, other days you can get some pretty decent moves. Let me show a 4, and then I'll kick it down to a 2. Got another request for gold. So you can see it over here is the open of the equity markets. And if you had a 2, these would be much more pronounced. But for now, I'll just show a 4. I'll pop a 2 on before we change it. Between here, let's say that, like YM, you missed this first leg down. So let's look from this one. You missed that. How many short trades are from here, counting shorts, to 11:30? From 6:40, what is this? No, that's actually 7:15. How many legitimate short trades are on this chart, counting shorts? I'll give you 10 seconds. 9 seconds. How many short trades are from here over to here? Counting shorts. 5 seconds. This is testing your ability to see where the short should be taken. 3 seconds. Get some numbers coming in here. 4 good ones. 13 to 15 from Bill. 5 to 6 from Kathy. Anybody else? 2 seconds left. How many short trades on ES? All right, time's up. Now, some of them were good, other ones not so much. I would say that you had this area right in here. I mean, arguably, you probably got 2 out of there. You got 1, 2 little scalpies. Here's another one right here. Here's another one right here. You can make the case that here's another one right here. This was your moneymaker right here. Did you close above stealth and line 2 here? Yes, legit. Here's a deep retracement one. Here's one right here. Now you can make the case of this one right here. And you had another one right here. And you had a kiss right there. And you had another one right there. Lots of scalping. So in the case of ES, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Anywhere between, say 9 and 12. Now let's take this down to a 2 range and see if the entries are more pronounced. You should be, right? I'll leave all the squares on there. So even though, and this is contradicting what I said a little bit earlier, okay? We said that generally speaking in a protected trend move, you're generally looking for runners. But that's not always the case. I think you've seen a couple of cases here where it'll spurt down a little bit, maybe 6, 8, 10 ticks, and then right back up. In that case, if you're going to trade that, even though it's in a trend, you're going to have to take the scalpies. Here's the same boxes. Okay, I didn't take the boxes off. That's the same boxes. Let's see if they're all the same. Yep, they're all legit. See how the entry is a little more pronounced with the 2? See, it's a little more pronounced with the 2. See how you can see a little much more detail in and around where the entries are taken? And that when you scalp out, you can scalp out real quick, get that scalper in there. Cool. Let's take a look over here at what happened over here. So was there a trend change at some point here? I trade the 4 with oil, Lewis. In fact, ES is one of the few instruments where I'll trade something other than a 4, simply because you can see with the 4 you just can't, there isn't a lot of movement on ES. Okay, ES, here, let's look at a couple of these movements here and give you some perspective on this. From here at 94 and 3/4 down to here at 91 and 3/4 is 3 times 4 is 12 ticks. Yeah, 12 ticks. From here at 93 down to 89, 4 times 4 times 4 is 16 ticks. Most of your trades, I can tell you for a fact, because I trade ES sometimes, not all the time, but sometimes I'll trade it. I'll know that once you get beyond 4 to 6 ticks and you get up in that 8, 10, 12 tick range, 14 ticks, you want to be locking down and you want to be tightening your stop if you're going to trade ES. Use a smaller bar like a 2. And if you're going to trade 2 lot, be quick to your scalp on ES is going to be like 4 ticks. Okay? And then you get your entry down within like 3 ticks of your within 3 ticks or 2 ticks of your entry. So it's not as loose as the other instrument. What were those numbers on YM? You can get a 10 tick scalp, initial stop 12, and you come down to 5 ticks behind your entry. Okay, you can clearly see that if you're going to trade ES, the numbers are different. The numbers are different. Here was the biggest run right here. This went from 03 1/4 down here to 96. So that's 6 times 4 is 24. This is a big move for ES right here, 24 ticks. That's a big move. This one was kind of chopped up. I mean, here you got short here. You probably got stopped out. You could have re-entered here. This was actually another trade. Now I blow the 2 up. See it? If you're going to trade ES, you can go 8 on the initial. So you're going to go 4 on your 4 on your scalp. 8 would be your initial stop, 8 ticks above your entry, and then you get down 2 ticks behind your entry once your scalp comes off. Now, look, some days you're going to get big moves. Today was a big move. This is a lot of volatility on ES. I mean, there's 1.5 million contracts flowing through here. Volume is pumping. Okay, you can put tons of contract on this thing and it would just gobble it up. Nom nom nom. You could throw 100. You could throw 100 lot here and it'll just gobble it up with no slippage at all. Other days when the market is super tight, you're only going to be scalping ES. I mean, I've seen days where it's trapped in a 16 tick range for most of the morning. You're not going to be able to pull off that runner thing. You're just not going to be able to do it. Okay, final questions. I'm going to go ahead and stop the recorder. Are there any final questions tonight? We ran a little bit over. That's okay. Any final questiones? Sorry I couldn't get to, I think somebody was asking for 6E and 6B. I'm not going to be able to get to those. Do me a favor, if you come on Saturday morning, can you remind me about that? I can pull up some currency futures. Yeah. Look at 6E, dollar index, 6B, British pound futures, 6J, excuse me, 6C. Yeah, ES is a little bit slower. If you're used to, if you find that some of these other instruments are just moving too fast for you to get in and out and see the trade, and you want something moves a little slower, gives you a little more chance to get in and out and think about what you're doing, ES might be something for you to look at. Trade it in Sim. Use the same methodology we're looking at here. Right? Use the same methodology we're looking at here. All the things are the same on ES. Everything. Look at a 2. Put it all up there, and then pick your spots. Okay, Lewis, Kathy, Bill, Weldon, Walter, Toby, everybody, thanks for sticking around. Raymond, have a great evening, everybody. We got non-farm payroll in the morning, okay? So you might be saying, well, what the heck is that? We saw the big reaction to the bond yields are like at 11-year highs. So what usually happens when bonds go up? Do equities go up with it or down? What does that mean when bonds are going up? What about when gold? When gold goes up and bonds go up, does equities go up or down, generally speaking? This isn't always true, but for the most part. Right. It's the opposite. Generally speaking, when gold is running up and bonds are running up, equities are normally selling off. So keep that in mind. I'll get the news bots kicking in here on this unemployment numbers. So this is what you're looking at right here tomorrow. Where are we at here? Forex Factory. Most of you know, of course, we use Forex Factory for our news related to financial markets. 5:30. Oh, Canadian getting some unemployment numbers too. That's not going to affect us here, but here's your non-farm payroll number right there. Now, don't trade right at 5:30. You've got to let this thing move around for a few minutes because you get news bots will push the markets around very precipitously. If you want to stop in front of a freight train, try to take trades around 5:30 Pacific. Don't do it. If you're up then, you can wait as long as 5 minutes. But what you're going to do is wait till wait till whatever you're trading resolves itself. What direction is it going? Is it heading back up? Was the news bullish and they're selling off? Whatever. Buy the rumor, sell the news. If you don't want to do it, you wait until we open the equity room at 6:30 or 6 o'clock with Gary. And then we'll see what direction the market's going. Just wait, take your trades there. Lewis, I read books years ago. I have a whole wall full of books. Nissan's candlestick books, I have all those. I read all those. I got to tell you, truth be told, Lewis, that's all. And everybody, is there books I can read on that? It's a lot of that's outdated material. It's just outdated material. You know what I mean? It's not really relevant to what we're doing here. I think you're better off just sort of working with the charts that you have, learning the setups, and trying to marry the instrument that works with your trading style. Instrument selection is key. It's critical. You've heard me say that 1,000 times. Yeah, sit by the pool and chill. Okay, have a good one, everybody. Have a great evening. I think, is there a football game on tonight? I know there's a baseball game. Anyway, if you like sports, get into that. If not, we will see you bright and early in the live room in the morning. Have a good one, everybody. Good night. Adios. Bye now.